All right, what's going on, Block Circle team? Hope you guys are all having a wonderful start to your week. So today we're going to be looking at Dogecoin to show off a couple examples of how we can use the candlestick setups that we just learned about in actionable trades. Now, in the following videos, we will kind of combine these price action candle setups with using a stochastic cycle, using momentum, and then using the EMAs that we learned in the previous videos to give us a big confluence of positive indicators to give us as good of an edge in the market as we can. But in this video, we're just going to focus on price action and candlestick setups. And in the end, that's all you really need. If ever you have signals that are kind of, I don't know, working against each other, you might have price telling you one thing and your slow stochastic indicators telling you another thing, but momentum is telling you another thing. 9 times out of 10, you're going to want to listen to what the price action is telling you. Nothing is going to beat that. And in the end, all you really need to trade is a blank chart like this with candlesticks. That being said, we will use the stochastic, the CCI, our momentum indicator, and the EMAs and moving averages we have later on to show you how we can use these all in combination to get better risk reward, identify better places to be long and short. But for now, let's just focus on price action. And some people will choose to trade solely based off price action. Hold on, I can feel a sneeze brewing here. Hold on. Whew, excuse me. All right. So what are we looking at here? We have Dogecoin versus Tether US. So Dogecoin USD. And right now, what do we see, right? I'll tell you what I see is a pattern of lower highs and lower lows, okay? At this point, Dogecoin is in a downtrend. Now, just for reference, previously, it was in a monstrous uptrend, which, we can go over how to trade that too later. Maybe we'll come back to trading the monstrous uptrends. They're kind of easy. Your setups are going to work out a lot better when you're in a strong bull market. So I'm trying not to just focus on those, but you'll see the setups we're learning right now, and specifically a crypto bull market, they will work out way more often than you would normally expect. But we're not going to focus on that right now because it just feels a little bit too easy. What we're going to focus on is, how you can trade this, say, maybe after the bull market, when this pattern of higher lows and higher highs turns into lower lows and lower highs, okay, which happens right here. Okay, we have our first, well, you could argue here we had a lower high, lower low pattern, but you could also argue that just barely this was still technically a higher low. So we'll focus on over here where the actual trend breaks, which we can also see in our EMAs where previously we have this super clear trend, prices making higher lows at our key moving averages, and then we start to break down below them over here, and that's when we really get a shift in trend, especially when we make this lower low over here, and you can see we've also flipped all of our moving averages bearish. So that's the first indicator to me that something is in a downtrend. Again, we're not going to focus on the moving averages much in this video, but they will be helpful later on. All right, give me 1 second here. Sorry, I got a little bit of a cold right now, so I apologize if I gotta mute my mic occasionally to sneeze and blow my nose and whatnot, but anyways, let's look at some actionable sell setups just based off of price action, and then we'll go a little bit further ahead. We'll analyze when and why the market trend is shifting and how we might play it differently over here and over here than we will be playing it in here. Okay. So again, we've determined that price is making lower highs and lower lows now. So we want to be a better seller than we want to be a buyer, right? We're focusing on selling higher and buying cheaper. Okay. So let's say you come into the market at, I don't know, at this point. All right, this is the start of January in 2022. Okay. So you've identified you're in a downtrend, so you're going to look to be a seller on any rallies towards our key pivot lower highs. And right now, the main ones that I see are this one up here, as well as all the way over here. And then, where did I say we're going to start? The start of 2022, so right here. So then we have this pivot lower high right here as well. So to get the best risk reward, ideally you want to be selling as closely to this level as possible. Thus your invalidation, which is above this level, i.e. if price trades above here, you know your thesis was wrong, maybe the trend is flipping. You want to be as close as possible to have the best risk reward, right? Versus if you were to sell, you know, here, your risk reward is much worse, right? Okay. So let's zoom in a little bit and see if we can find an actionable candlestick setup. So the first one that I'm seeing, and it's a pretty obvious one, is we have our key low here and our key high. Price trades in a little lower time frame downtrend all the way down to this low. And again, if you're coming into the market right here, you don't need to feel like you have to get exposed right away. Like, I got to take the first setup I see. It's okay to wait out a good setup that fits your risk profile. Okay. And so here's the one I'm seeing. Price trades almost all the way back up to this level. And you could go ahead and start selling some into the level preemptively if you prefer, especially once you see this big topping tail close. You know, I'm not really always one to go what we call contrarian, which is, you know, if you were to sell on the way up, anticipating a rejection, it's a lot more of a gamble than if you wait for, say, this bearish engulfing plus topping tail setup, right? You guys remember that one from the last video? Let's zoom in a little bit here. So if we follow the higher lows of all these little bullish candles, the first bearish engulfing we have is right here, right? We have a topping tail, really a double topping tail, plus a bearish engulfing. This is kind of your first opportunity to really sell with confidence. And again, you can sell on the way up as you get close, excuse me, close to your invalidation level, but you know, it could very easily just wick right through it, stop you out, and then close back below it. So I think it's a bit better typically to just wait for the candle close and then enter when you get a setup. So this candle at 17.6, again, we can see the price over here, 17.6. That's your first chance to go short, sell some Dogecoin, and then you'll look to buy back and potentially close the trade once you can do basically the opposite of what we saw with these bullish candles, right? Except this time we'll follow the highs of our bearish candles, okay? And we'll also go into take profit strategies later on, but one of our first ones is taking profits on the initial surge, and it's kind of a three-step process. I'll go ahead and hint at it once here just so you guys can be thinking about it. The first take profit is 2 to 3 candles in your favor. Pardon my terrible handiwork there. 2 to 3 candles in your favor. You take profits. The second time is 5 to 8 candles in your favor. You take profits again. And the third time, or the last time, is your trailing stop, which you take only when the pattern of lower highs and lower lows has broken, or in an uptrend, when the pattern of higher lows and higher highs is broken. Okay? So what might that look like? Again, here is our candle that gets engulfed. So your entry might be right here on this candle close. Why can't I change color? Here we go. So that would be your short entry right here at, again, 17.6. You get 2 candles that go in your favor. Good first opportunity to take some profits. You get let's see, 1, 2, 3, 4, 5 candles in your favor. 6, one of those candles is another good opportunity to take profits. And then the last time might be whenever we close above the highs of one of these bearish candles, which happens right here. And you can see you basically get the inverse of what we had up here. We had a bearish engulfing candle here, and here we get a bottoming tail plus a bullish engulfing. Now, there's kind of two ways you can play this. If you're just playing it as kind of a quicker little swing trade, this would be the candle where you close the last of your position. If you're trying to build a kind of a longer time frame investment, then you're looking to maintain this short position with every lower high, then you would keep a piece of your position until this trend either makes a higher low and pushes to your invalidation, or until you get another sell setup, at which case your new invalidation becomes that level. So let's look at it both ways real quick, right? You sell here, you take profits once here, and again, maybe somewhere in here, and then you get a bullish candle set up and you close out the trade. Simple as that. A nice quick trade, easy money. You're in the money the whole way. Again, it's not always going to be this simple and perfect. Here's another example in front of the last lower high over here, right? You have a bearish engulfing right here. You have another one over here, so that's a chance to add to your trade. And then here's your bullish engulfing, where you would look to close that trade. Again, nice and simple. Sell, maybe sell some more, take some profits, close the trade. Sell, take some profits, close the trade. Now let's say you're looking to build more of a longer term investment hedge against Dogecoin. Maybe you take this sell setup and then you add again over here on this sell setup. And you take some profits, and you see this. And let's say at this point you close out 80% of your position, but you leave 20% of these sales until your original invalidation above these highs is taken out. Okay? And then you come in here again, you get another bearish engulfing plus topping tail, and you make another sell setup. Okay? You take some profits, you get the bullish engulfing setup, and you close out 80% of this trade, but you leave 20%, again with your invalidation, either above the high from when you entered or above this previous high. Either one works just fine. And so now you've had two profitable trades here and here, but you're still running a profitable trade on 20% size from over here. And now you're also running a profitable trade on 20% size from here. So you've closed out enough that if the market bottoms and it runs all the way back to your invalidation, you're still going to have made good money. But if this downtrend continues, you're going to be able to compound your gains from all these trades into a massive one until the market eventually does bottom out, which we'll see in just a minute. Excuse me. So anyways, let's keep going here, right? Two really simple setups. Now, once this trade is closed out, we're going to be looking for the same thing, right? A lower high in front of here, came here. Any kind of lower high in front of this level, we're going to look to take a sell setup. So, you could start with, I see a couple in here that would be okay. Like we have a bearish engulfing right here and another one right here. And then for these, I would say you're probably going to want to use a stop above this high here. You could use the original one that's up here, but that's a pretty wide margin to be wrong. You're talking 30% difference. So you're not going to be able to really sell on that much size. So if you use this, you're going to end up getting stopped out when price rallies over here. So this might be a small loss. Again, we'll talk about risk management later on, but let's assume this is a 1% loss and then again, another 1% loss. So we've got 2 big wins with these trades that went pretty heavily in our favor. And then we've got 2 small losses right here. And once again, we know we're still in a big picture downtrend. So we're going to be looking for the next big lower high to form and take another short setup. And that one emerges right here. Okay, we have a bearish engulfing candle there. And once again, depending on how aggressive you want to be, it kind of determines where you put your stop. I would recommend for this trade, much like this one, just putting your stop above the local high, which is right here, because we're trying to capture a new lower high versus retesting all the way back up here. So how might this one look? Okay, you sell this setup, invalidation above the highs. Come in, we have another one right here, another opportunity to sell. And then you have another one right here, another opportunity to sell. And then I would say this is probably the kind of candle you'd see where you could close out that trade and wait for the next trade, which comes, almost immediately after that when you close below this candlestick. And basically so on and so forth. You're going to be looking to sell into these rallies pretty much every step of the way until this bigger picture trend fails, right? Until we stop putting in lower highs. You almost do it here. You can see in this case, we rally from the lows all the way back to our key invalidation level, wick right through it, but no close above it, and then immediately get an extremely harsh rejection with this bearish engulfing candle, which would, you guess it, be a great sell setup as we've now put in another lower high. So how could you trade this one, right? You come in, you sell on this candle. Here's another opportunity to sell. If it needs to be said now, instead of this being your invalidation, since we've run the highs, the new invalidation would be above that level, right? So you sell here, stop above the high. You could sell some more here. I see another bearish engulfing right here, right? Same stop on all of these. I see another one here. I see another one. We get a attempted reversal here with a massive bullish engulfing candle. But what does that end up becoming? Another lower high, right? And so you basically just keep following this downtrend, right? Another bearish engulfing here, right? This bullish candle gets closed below by this one. I see another one here, and so on and so forth. Now we do actually get a pretty big puke here. You're not always going to get massive trades like this that play out, but specifically, this sell setup turns out to be massively profitable as you get a huge dump, followed by another few good chances to sell here, right? Another bearish engulfing, another bearish engulfing, another bearish engulfing. With these, you're going to use your stop above the local high up here. Another bearish engulfing, another bearish engulfing. So, it's up to you, right? If you've been, compounding your sales, like I said, we had 20% still running from this trade, from this trade, from this trade. You probably still have some running from these. Whether you keep adding or not is going to be up to you in the end. At some point, it's totally okay to just keep trailing out these positions instead of constantly adding more risk. But as long as the downtrend continues, I think it's okay to keep taking these trades, right? And then once we stop making lower highs and lower lows, you gotta, don't be emotional about it, right? That means the downtrend is over and it's time to start prepping to be a better buyer once again. And again, there'll be stuff we can do with the EMAs and our stochastic to give us a better idea of when that's happening. But I believe the first sign is over here, right? We put in the big low. Maybe there's going to be one more But at this point, we probably want to stop shorting so aggressively and start looking for the market to put in higher lows, which it does over here. Okay, so now we have a massive trend shift here, okay? Our long-term trend of lower highs and lower lows has reversed into higher lows and higher highs. So let's see, right after, we basically get an immediate puke, right? Price reclaims, all these highs in here, and then immediately fails back below them. So I don't tend to trade these kind of markets. We're about to enter what's called a ranging market, where we're really just kind of, instead of trending downwards, right? Now we're going to be consolidating between this level and this level, and it ends up going on for an extended period of time. So whether you want to take the same setups you did before, right, we're still going to have a little downtrend here, so you can still be a better seller if you want to. But you have to keep in mind during this, that big picture, we don't just have a downtrend anymore. Now we have a new potential uptrend with higher lows and higher highs. And what ends up happening is you come in, you make another big picture higher low, and now we're waiting to see if we get expansion kind of above all of these highs here. So you can still come in, right, after you get this big move and immediate reversal. You can still come in and take the same sell setups into these lower highs if you wish. Again, I probably wouldn't. I would rather be a little bit more patient. This happens over the course of basically 8 to 10 months. So, it's really up to you if you want to come in and be trading this asset that's ranging for all that time. I think it's fine. I would just prefer to kind of position myself on the weekly, for example, for this bottoming process playing out, right? When you get a range like this, I become increasingly confident that this downtrend will eventually turn into a bigger picture uptrend, right? Which we're going to see happens here pretty shortly. But again, some people that you want to be more active, you want to be trading, well, there's still going to be plenty of sell setups along the way. Again, you just follow these higher lows from these bullish candles, and somewhere in here is probably going to be another good sell setup, stop above the high. Again, I didn't outline it perfectly, but specifically when this candle closes below this bullish candle, right? You could sell, stop above the high, and continue playing it like you did over here, right? Here's another sell setup. This bullish candle gets closed below by this one. Here's another one. And then you're basically just going to follow this kind of trend until it bottoms out, somewhere over here. And that's when you would close that and wait for the next sell setup, which is probably going to be somewhere over here, right? When this little uptrend breaks. So, I think it's fine to play that if that's how you want to play it. There's a decent sell setup in here, a decent one in here, another decent one when this trend breaks here, and so on and so forth. But all the while, you want to be watching, because we remember we had our first major higher low, higher high pattern. So we do want to watch for when these lower highs start to give way and a new uptrend starts to form, which starts to happen over here. So at this point, now you've got a pattern of lower highs and a higher high, higher low pattern. So I probably would not want to continue selling in here the same way you would here and here and here and here and all that stuff, right? Instead of selling the bounces, we're going to look to be buying the dips. So this is probably going to be the first time where instead of looking for a break in higher lows to sell, you're going to be looking for a break in lower highs to buy. Okay, and I believe that happens here pretty shortly, right there. So this is going to be your first chance to do basically the exact opposite of what we've been doing the entirety of this downtrend, right? Now, this is starting to look like a better buyer's market, okay? So you close above this high. That's going to be a good chance to start your position. And, you know, how tight you want your risk reward to be is up to you. You can do a stop loss right below the local low. Since this is kind of a longer term trend, I would recommend having a little bit less size on the initial buy and having a stop loss below this key higher low. Because the big trend we're trying to capture right now is not just, you know, something like this, right? We're really trying to capture something like this and make a bigger position out of it, okay? So let's see how this keeps playing out. Again, you have a massive bullish engulfing candle here above your key lower highs. That's a chance to buy. And then we'll look to buy. Again, you're not always going to get immediate reactions like this, but sometimes you do, so that would have been a great entry. Any kind of pullbacks we get in the future, we're going to look to buy in anticipation of another higher low. Right? So let's see how this plays out. Again, you get some big expansion. Probably a good time to start taking some profits. See where we go from here. Goes higher. All right, now here's our first sign that this little intermediate term trend might be over, right? We're still going to focus on capturing the next higher low. But as far as just this trade entry goes, if you haven't taken profits yet on a move like this and you get a big bearish candle like this, it's probably a good idea to take some form of profits, right? So let's say you bought this breakout here and you took some off here and here. In that case, maybe you don't need to take any more off here, right? We can keep on some size to try and have a bigger position as this trend emerges, right? Let's see where we go from here. So just consolidating, no real actionable setups. We really want to get a better pullback towards the lows. No engulfing up, and there we go. So now we've had some time for price to chop around a bit, and we get a bullish engulfing right in front of the low of this candle. And this is big because if you're to zoom in here, look at how much distance this candle takes up, right? It's from 20 cents all the way down to 12 cents. One daily candle spans, you know, a 100% price range, if you will, 10 cents basically to 20 cents. So ideally, we don't really want to be buying up here. We really want to be buying in the lower half of this range, right? So we've got our first position. Let's say you just bought, just to put a number on it, $1,000, right? You take off maybe 300 bucks here, 300 bucks here, and you keep the last piece on to compound into the future trades. Here's another future trade, right? You can buy the bullish engulfing. Again, based off how much size you want to put on, you can do a stop right below the candlestick setup, or, you know, in this case, when the candlestick setup is so close to a key pivot, I would say just put your stop below this pivot. And there's your second setup, right? So the first setup was a break of this pattern of lower highs and lower lows. Your second setup is a potential higher low forming here with this bullish engulfing. Let's see where we go from here. Okay, so now we've bounced nicely. What we're going to look for here is a potential BCI to add more to this position, right? Let's see if we get it. And we get it with this candle, right? We close above this bearish candle with this one. So that's a chance to add again to your position. And again, depending on how aggressive you want to be with this BCI trade, you can use the candlestick setup stop, which is right below the BCI, or you can just use the same stop as your bullish engulfing entry below the low. It all really just depends on how you want to play it, right? If you want to be a little bit more aggressive, you can add on more size here with tighter risk reward level. If you want to just make sure you're capturing this trend, you can buy less, but have a wider invalidation level. And likewise, if you remember, our original entry was this candle breaking out here, and our stop loss was either this level or this level. And the reason we're doing that, right, is to capture this bigger trend. Well, if we come in and make a higher high here, we're going to move our invalidation on this original setup to this level, which I do believe we get over the coming days. Oh, there's another BCI, another chance to add. Stop below the low or stop below here, whatever works for you. And then today, we get follow through into the high. So what is that? What do we have here? We have one actionable setup with your stop below the low. Take some profits, take some profits. Trailing stop the rest with higher lows. Another entry here. Stop below the low. Another BCI entry here. Another BCI entry here. And then we make a new high. So now we can raise our stops up on this entry to here. And so this is current day price action. You can see it's still adjusting. If we end up coming down and making another higher low, let's say we get another bullish engulfing candle in here, and we push through to a new high above here, then all of our trades we made in here, we can raise our stops from here up to there, right? Thus, we are making sure that with each entry, we're taking some profits, ensuring a profitable trade, right? You know, you can buy some here, take some profits on the way up, but we're keeping some on in case this turns into, you know, a really, really profitable trade up towards, 50 cents, right? So you're ensuring that each individual run up, you're making money, right? Taking profits on your initial buys all the way up, but you're also keeping some on, thus that, let's say you bought 100,000 Dogecoin here and you sold 80,000 on the way up, but you still have 20. And let's say you do the same thing here, right? You buy 100,000 Doge, you take 80 off on the way up, but you leave another 20. And let's say you pull back, you get a bullish engulfing, you buy another 100,000 Doge, you take some of that off, maybe you leave another 20. If you can manage, a good uptrend, by the end of this, you might have 5 profitable trades already locked in. And with each one, you've now left an entire trade's worth of compounded Doge that, depending on how long this goes for. And we saw this big picture downtrend last hundreds of days, right? You might be able to compound a ridiculous amount of Doge while also maintaining guaranteed profitability because you're taking profits on your main positions on the way up. Okay? So, I guess we'll stop there. Again, we could go, you could go into this and find hundreds of different trade setups depending on how you want to play it. You can play it across different time frames. I don't want to overload you guys with information too much in one video. Maybe I already have. I'm not sure. But again, if you guys ever have any questions on this, just feel free to reach out to me in the Discord. I'd be more than happy to clarify anything for you guys at any time. But I think that's going to be all for this video. In the next one, we're going to try and incorporate moving averages into our trades and maybe throw in the slow stochastic as well, so we can try and add a little bit more confluence to our trades. Just to give you a sneak peek, for example, you'll find this bullish engulfing setup happened right at key EMA support. So we'll see some cool ways we can get even better risk reward on setups like this in the coming videos. All right. So I hope you guys enjoyed that. Do keep watching if you want to learn more. And again, if you have any questions for me, just feel free to reach out at any time. All right. Peace out.